Oh God, that is some really old coffee. But anyway, trading around pure price action is one of the best ways I have ever found to trade. And if you can master price action trading, you can not only set yourself apart from other retail traders that are using indicators all over the place, but it can also dramatically increase your probabilities of becoming a consistently profitable trader. And that is why in this video, I'm going to show you a really simple 3-step process that for me turned price action trading from something that seemed like rocket science to something as easy as counting 1, 2, 3 with no exaggeration at all. So if that sounds good, go ahead and click that like button for me. Go ahead and follow us if you're new by clicking subscribe and the notification bell to join the TTC family. I'm gonna let the intro and disclaimer roll, and I'll see you directly after. Welcome back. And first off, for those of you who are brand new, let's talk about what price action trading is. Very simply put, price action trading is trading based on what you see on the chart with no indicators. It's trading based on the action of price. And we use price action trading in order to find really high probability setups in the market based on things like trend, support, resistance, supply, demand, candlestick patterns, chart patterns. We use a combination of all of these things in order to find really high likelihood opportunities on a specific instrument. In today's case, we're going to be talking about Forex. And the how we use price action to do this is where people oftentimes get stuck. So let's dive right into this 3-step process right now. Okay, so what you see on the screen in front of you is the 3-step process that I use in every single price action trade that I place. And if you adopt this 3-step process, the first thing it's going to do is keep you from placing random trades, which is the downfall of a ton of beginners in the trading world. They'll just go out and want to place a trade during a day. So they'll just click the buy or sell button no matter what without doing any preemptive analysis or any preparation. So this is my preparation for any price action trade. Let's get started with number 1. The first thing I do when I'm going to trade a price action trade is look for the trend and the structure levels that I need to pay attention to on any particular market. We're going to take a look at a lot of examples of this, but right now we're on the 4-hour chart of the Aussie dollar. You can do this on any time frame and on any financial instrument, including crypto, stocks, whatever it may be. But let's go ahead and get started. On the Aussie dollar, let's identify trend first. What type of trend are we in? Well, depending on the way that you classify trend, it may be different for everyone, but I can tell you the way I'm identifying this, we are currently in a downtrend because of this move right here. We've seen price have a dramatic fall and then break into new lower lows. The definition of a downtrend is a low followed by a lower low, along with a high followed by a lower high. We have that right here. I call this a 1, 2, 3 move. So now I have identified trend as down. The next thing I want to do is identify the structure levels that I'm going to be paying attention to. The way I define a structure level that matters is the most recent level that was broke in my 1, 2, 3 move. Let's draw this out. 1, 2, 3. The most recent level that was broke is right here, right? This is the low that was just broke to make the lower low of the trend. So with that being the case, I ask myself, do I have a level that is also, not only was it the low that was just broken, but that has also been tested multiple times looking left? If I scroll the chart back and draw our box to the left, you can see that we have this level as resistance and support. So now I've checked off 1, which is identify the trend, downtrend, and I've checked off 2. Here's the structure level I'm paying attention to. Now, the only way that I'm going to be paying attention to levels, the only way I have a structure level that I consider important enough to trade around is if it's the most recent level broken for trade continuation and if it's been tested multiple times. So I'm looking for those 2 factors, and at this point, I'm done with number 1. So what's the next step? What's number 2? Number 2 is to prepare and predict. Let's do that. This is kind of what that would look like. So preparation and predicting, if the market's sitting right here at the end of this red candle, what could happen? What's the prediction here? Well, we could see price just continue down, right? Price could do that, no problem. Or price could continue up. That's essentially the only two options that we have. It's going to do one or the other. Now it may consolidate a bit in through here. Oh, I can draw Pac-Man. Hold on. It's an ugly one, but we can draw a little ghost right here. Yeah, we're calling this the Pac-Man pattern. The ghost is like running away. Ah, so scared. That's it, Pac-Man. But essentially, these are the only two things price can do, either go up or down. So what I have to ask myself during my preparation and prediction phase is, if price goes up and we stay in my structure zone, then my prediction, that's the preparation, price could go up. Now I have to prepare for that and predict what I think is going to happen. If price goes up into this area, my prediction is that we will continue lower based on the fact that I've identified my trend as a downtrend and that structure-wise we are in an area that is likely to push the market lower. So after my preparation and prediction, which is just asking yourself, what can price do? Price can either go up or down. If price does that, let's say goes up and stays in our zone, then predict what you expect to happen. My prediction is that we're going to fall from this zone. Hopefully you're keeping up with this. Again, it's a really simple process, but it can save you a ton of losing trades and save you a lot of beginner mistakes, which normally tend to be just jumping into trades without doing any preemptive analysis. Now, once I've prepared, once I've predicted what I think is going to happen, my next step is to take action and enter a possible trade. And personally, I have a few ways I can do this. You can decide for yourself how you enter a market, whether that be a chart pattern, whether that be some kind of candlestick pattern, whether that be just selling pressure based on whatever you consider selling pressure, considering we're going short right here. Personally, I look for chart patterns on lower time frames. So my take action and enter the trade happens one time frame lower than this. Right now, we're on the 4-hour chart. This is the 4-hour. My trading time frame, if I'm on the 4-hour, is going to be the 1-hour chart. And I'm going to drop down to that 1-hour chart and look for patterns like the double top or head and shoulders pattern. Those are the only two that I trade. I have a full video on chart patterns that'll be in the top right-hand side of the screen. But if price gets into this area, that's what I'm going to look for, and that's going to be my action taking, my enter into the trade. That's the third step to this process. So as you can see, following and adopting this 3-step process puts you in positions to get the best trade possible. And what I see a lot from beginners is they never put themselves in position to get the best trade possible. Instead, they just want to get into a trade. They just want to make sure they're trading every day, and that's a recipe for disaster. You only want to enter into a market if you have an extremely high probability of having a winning trade or a really high probability of having a large reward to risk ratio. What you'll see here as I click play is that price comes into this area, drops a bit, gets back into this area. This is when I decided that I wanted to go ahead and take a chance on this trade. We saw a lot of selling pressure, especially on a lower time frame right in this area. So with that being the case, I actually entered this trade a couple of candles later, somewhere around here. And I put a screenshot up of entering this trade. I sent it out to EAP members so you can see the proof that I actually sent this to everyone on our email list in our paid program. But entering the trade right here, again, taking action after all my preparation. And just to hit on this one more time, a lot of traders are really good at number 3. They can get into the market. They can see a double top or double bottom. They can see a candlestick pattern, but then they just take action, but they have not done 1 or 2. They've not identified trend or structure levels they should pay attention to, and they haven't prepared by predicting what they think will happen based on these 2 things. So ensure that you do 1 and 2 before you're actually taking action or entering into a trade, because otherwise you're just randomly placing trades and you're going to lose money. After getting into this area, as you just saw, this was a trade we actually placed. And since then, if I click the play button here on market replay mode, you can see that price has tumbled down dramatically. Now, does that mean that every time I place a trade like this, price tumbles down dramatically if I'm short, or that I'm correct every time? Absolutely not. No, I'll show you examples of losing trades throughout this video as well. I really want you to take this home with you. What I mean by that is I want you to have this ingrained in your head so that it's really, really easy to identify this three-step process. So what we're going to do is take a look at a few other examples, starting with another trade we actually had on the pound dollar. So let's take a look at the pound dollar. We'll identify this three-step process and talk about the trade we had there as well. So here on the pound dollar, let's go through the same thing. What's our first step? Our first step is to identify a trend and the structure level that we want to pay attention to. Have you ever seen traders that have like 1,000 horizontal lines on their chart? Hopefully I can delete these pretty quick, but this is what their chart looks like. Do you know what I'm saying? Maybe your chart looks like this. Instead of marking off every structure level you can see on a chart, just pay attention to one at a time. And then once the price gets above or below that one, put another line on your chart. Like, it's not that hard. Just make sure that you're not cluttering up your chart so much that you can't even see the extremely obvious levels. Like this one right here. So let's go ahead and back up. Identify trend. What trend at this exact moment where price is right now would you say that, the pound dollar is in? Hopefully you said downtrend. No matter how you identify trend, this would be considered a downtrend. As you can see, if I draw this out, we have a low to a lower high, lower low, lower high, lower low, lower high. Another thing that I get asked a lot about trends is, Stephen, it hardly ever looks that clean. That is absolutely true. And another thing that beginners have so much trouble with, they want to be in a trade so bad that they don't wait for very clean setups. They're trying to trade trend continuation and consolidation. They're trying to trade trend continuation even though the market doesn't look clean like this. So whenever I get the question, Stephen, what do I do because trends don't always look that clean? If it's not extremely obvious, if it's not an extremely clean trend, don't trade it. Go move on to another pair. Just don't trade anything that doesn't look extremely clean. If you're confused about what trend the market's in, it's very likely in consolidation, and you don't need to be trading trend continuation during that consolidation. So let's back up here. Here we go. We have our downtrend, right? Trend is identified. Structure level. I just pointed it out, but this should be the obvious low that was just broken. That's the structure level, if price is right here, that we want to pay attention to. We don't want a line in every single place on the map. You know what I mean? We want to pay attention to the obvious level, which is the latest level of support that was broken. So now we have identified the trend. And remember what I said about structure. We can only take trades if this structure level has been tested multiple times looking left. And I know this looks a bit choppy, but once I see this and consider that this was support, along with it being support and the latest level that was broken, that is enough for me. I just want to see that it's been tested multiple times in a recent span of time. With all that coming together, we have our structure level and our trend. Step one is complete. Preparation. Price can either go down or up. That's the preparation, right? If price goes down, we expect it to break below this low. Why? Because we're in a downtrend. If price goes higher, we expect this level to become resistance and push the market lower. Why? Because it's the latest level of structure support that was broken, and we know support oftentimes becomes resistance. It's also a level that's been tested multiple times. There is our preparation and predicting. The next step for me in my trading is to take action and enter on a 1 hour chart based on some type of chart pattern, like double tops, like head and shoulder patterns, whatever it is. And at times I'll go really aggressive and enter based on candlestick patterns if I'm really in tune with the market that I'm trading, and a few other factors come together that I'm not going to explain in this video. But essentially I'm going down to a 1 hour chart to take action and enter based on chart patterns. So in this case, on the pound dollar, price eventually came up into our zone and gave us an entry reason right in here. Again, I'll throw up the screenshot of entering this trade somewhere to the left side of the screen. That might be the right side of the screen, not sure, but somewhere on the screen. We entered this trade and it eventually and almost immediately pushed down, and has since we've seen like a waterfall since then. Now, again, as I said, not like this works every single time. It's just really easy for me to point out examples that we actually took in live trading and that are winning trades. But I can point out examples of losing trades as well, and I will do that right now. For instance, let's keep this on the screen. Let's go right here. And right now, let's go ahead and identify, prepare, predict. We know what price is going to do because it was already on the screen. Pretend you don't. So if you didn't, what would your preparation be? Identify the trend. Right now, very obvious uptrend on the pound dollar. We're in an uptrend. What's our latest level of resistance that was broken? Well, if we have our higher high, higher low, higher high, higher low, higher high, then the latest level right here. So we'll make a little line there. Look left. Oh, look. It's a level that's been tested multiple times, and it's the latest level of resistance that was broken. Draw out our little zone. I have no set in stone rules for zones. I just kind of draw them based on experience. So I never know, like I don't have a set how big's the zone going to be. I get that question a lot. I don't have any rules for that. I just draw them. That's all I know. I draw them and I make sure they have as many touches as possible. So there we have our structure zone. We've identified trend and structure, preparation. Price is either going to go up or go down. If price goes down, we're expecting price to have a bounce from this level because of the fact that it is a solid level of resistance that could turn into support, and it's been tested multiple times. See how logical that sounds? But now let's go ahead and see what happens. Price comes down. Oh, that's a good aggressive candlestick, right? A lot of buying pressure right here with this green candle. So with that being the case, let's say you went aggressively and just entered that trade. Boom, you enter the trade. Say you're shooting for like a 1.5 or so. Click play. And eventually you are stopped out. So there's an example of it not working. The point of trading, and if you are a complete beginner, please listen up. You are never going to find something that's 100% accurate. Every technical factor in the world, every indicator, if you trade based on indicators, could all line up to tell you that the pound dollar is a buy and you should go long, and that trade could lose. When I click the button to buy or sell, I don't know if that trade's going to win or lose. No one does. No one can predict 100% accurate exactly what the market's going to do. If we knew the future, we would all be trillionaires, right? We don't. We are not trading based on the fact that I know whether or not the pound dollar is going to go up or down. I'm trading based on a statistic advantage I have over a long period of time with my 3-step system. If I trade this over and over, let's say throughout an entire year, I get 100 trades trading exactly like this, or I get 500 trades, whatever it is, just keep math simple. I get 100 trades trading like this. If I can get, and I normally do get, between 55 and 60% accurate, if I just get 55% accurate, and I have a 1.4 to 1 reward to risk ratio, then I have a statistic advantage that will play out over that long span of time and means that I'm going to make money over the course of a year. Dramatically more money than if I invested in an index fund. Dramatically more money than if I were to just plant my money in some stocks, for the most part, depending on the stocks. I know that. But it's just the best way I've found to trade pure price action that gives me an advantage. But that advantage plays out over time. That advantage does not exist in one single trade. The outcome of a single trade is random. I know that was a bit of a rant. We're going to do one more example. I think 3 is the magic number here. So I'm going to do one more example to ensure that you have this. Again, I know that rant was probably a little bit long, but just understand as a beginner that it was necessary for you to hear that. Even if you're just a struggling trader and you're not quite a beginner, if that's something you didn't know, now you know. So let's go ahead and move on to one more example of this, and I'll see you guys in just a second. So here's a trade that we're currently in on the New Zealand dollar. Sorry to blind you with the white charts, but that's just where I have all this analysis done. Let's go ahead and go through step 1. Step 1 is what? Identify trend and structure. Let's identify the trend here. It's not that hard on this one, right? Definitely a downtrend. We've had a waterfall on the New Zealand versus the dollar lately, so we have a downtrend. We know that. Trend, check it off. structure levels we want to pay attention to. Now, looking at this, the structure level I would normally pay attention to would be at least up here, because that's a bit more of a bounce up than this was. But let me explain why I used this level instead. I did look left. This is technically the latest support level that was broken in this downtrend. So with that being the case, I do have a reason to see it as a recent level of support. And if I look left, this is what really made me do it, is the fact that this level also had been reacted to dramatically by this market. So throwing those two factors together, this became my structure level. So now I have trend is downtrend, structure is right here. And with that being the case, what's my next step? Preparation and prediction. If we're going to predict or prepare, we have to prepare for what? Price to go up or price to go down. So if price goes down, we expect it to break through this low just because we're in a downtrend. If price goes up, we expect this level to become resistance because it's a previous level of support and it's been tested multiple times looking left. If we do push up to this level, what's our next step? We've now prepared. We've made our prediction that this should become resistance if this downtrend is going to continue, because it's the next major level of resistance price will hit. So the next step is to wait for price to get there and then take action / enter the trade. So let's go ahead and push the market forward here. Oh, we're in our zone. We got involved somewhere around there. I'll put, again, the screenshot up from the email analysis I sent out, which are like email alerts that come with the EAP training program. By the way, if you want to get involved in the EAP training program, the link is in the description, or you can go to www.eaptrainingprogram.com. But after we got in the zone, we got our entry, price started to push down, right? And eventually, after today's news, on the NFP, we did hit our targets today for a 1-to-1, moved our stop to break even, and we're still trailing the second part of that position just to show you a counter trend trade that's losing, so it doesn't seem like I win all my trades. This trade's about to hit the stop loss. And I risked this should have been 300,000. My position, I risked way too little. So it's a happy mistake. It was a mistake. This should be about a $1,900 loss, but cool deal, I made a mistake. Another trade I'm probably about to lose, just to be completely transparent with you guys, is here on the dollar. And I don't know, we're back at break even here on the dollar Canada. We'll see how this trade plays out, but let's end it on some losses, right? There we go. Hopefully you guys enjoyed it. If you did, comment below. Make sure you're subscribed if you want to see more content like this. Let me know in the comments section. Comment for sure if you made it to the end of the video. I wish you the best of luck on all your future trades, and I'll see you in the next video. Talk soon.